Hi, my name is Bonifacio Cisbreño Rosario. I'm on my third year now, taking up BS Accountancy. I'm here today to do a video recording on Accounting 6483, which is actually business combinations. To differentiate between the three videos and against the course, of course, our course was actually fully detailed. Begins on the transition, how it is being used by our PFRS 3. Actually, that's actually refers to the governing body on the standard we're gonna use for business combination, or we call it IFRS 3 for International Financial Reporting Standards. If we're gonna compare the videos against the course that we have, of course, our course is more detailed, more structured, because it covers all the definitions, the literatures, and the types of business combinations that we have, like mergers, type of mergers, and how it been measured. It will be in fair value and so on. So to discuss with that, in the videos that I'm seeing, where it covers the introductions of introduction of business combinations, how the summary of it introduced business combinations that governs the standard of PFRS, or the IFRS international standard. So before we're gonna go through with that, so the videos actually provided us the emphasis of the importance of the business combination in accordance to IFRS 3 accounting standards. It focused further on the understanding of this concept of business combination, understanding on the terminologies and the concepts of accounting business combinations, and learn how to compute goodwill or gain purchase on a bargain. Okay, so business combination is a transaction or other an event in which an acquirer obtain control of one or more businesses. So it's a transaction sometimes referred to as a true mergers or mergers of equals. This actually referred to the videos I'm seeing. Also, that business combinations are term used for PFRS 3 or IFRS 3. In business combinations, there are two types of acquisition, namely the net asset acquisition. Okay, and under net asset acquisition, actually the acquirer purchases the assets and assumes the liabilities of the acquired in exchange for cost or other non-cash considerations. So under net asset acquisition, we do have two types: merger and consolidation. So in merger, it's actually a contractual or statutory process by which one corporation of the surviving corporation acquires all of the assets and the liabilities of other merged corporation to become defunct. So meaning to say, when it's a merger of net asset acquisition, so company A plus company B equals either it will be company A. So meaning to say, the acquiree purchase the business of company B, and therefore it dissolves company B and make company a bigger company. While consolidation is actually a contractual of statutory processes by which two or more corporations jointly become a complete new corporation. So it means to say that when company D and company E consolidate each other, it's dissolve those company and make one big company, because might be the company D and F companies joined into one purchase, because we don't know the reasons behind, but in consolidation it's actually forming the two companies into a one company. Okay, so it jointly become a complete new corporation. The successors corporation, the original corporation ceased to exist and to do business, and successor corporation acquires all the assets and liabilities of the original now defunct corporation. So as I said, when company D and company F put all together their assets and liabilities, so they form a big company. That is what you call consolidation under net asset acquisition. Okay, to continue, for number two type of acquisition is the stock acquisition. The stock acquisition means that the acquirer obtain control over the acquire by acquiring majority of ownership and the voting rights of the acquiring. So there are types of stocks acquisition by voting rights. One is investment in fair value. So this one, you are actually have no significant influence or no control of the voting, because most likely you are actually on less than 20% ownership of the company. The next one is investment in associate. So investment in associate, you have significant influence within, you may own 20 to 50%. Okay? So meaning to say, you have a voice, but you are not on the majority of the votes. The next investment is the investment in subsidiary. So in this investment of stocks, in stock acquisition, so you have full control because you own 50% more of the stocks of a certain company. Okay, so again, in stock acquisition, so you have investment in fair value, and then investment in associate, and investment in subsidiary, where in subsidiary you have more than 50% ownership of the corporation or company. So therefore, whatever you say, so that they were gonna follow, because you are the one who actually have the full control of the ownership of the company. So let's go to taking on consideration how you gonna. So let us proceed and let's discuss the prevailing standard for business combinations. So in IFRS 3 business combinations, not all businesses that are combined are considered under business combinations. There are some exceptions. First, if the combination or consolidation is formed for the purpose of joint venture. Second, if the acquisition of an asset or a group of an assets is not, meaning to say, for example, you're buying for an asset but not for the whole company to have the full control, so it is not a business combination aspect. Okay, so like for example, that company is having line A for cartoons, line B is for bottles, and line C is for shoes. And if you want to buy the line C itself only, so you're buying only the assets for that purpose of line C. So therefore, you're not having the full control. You're just buying that assets, the main line C. So it is not part of the business combinations of under IFRS 3. Okay, and the second one, if acquisition by the investment entity of a subsidiary that is required to be measured at fair value through profit or loss, then under the IFRS 10 consolidation of financial statements. So it's also not part of business combinations. Okay, so let's move on to the steps in accounting for business combinations. What are those steps? First, identify the acquirer. Second, determine the acquisition date. Second, determine the consideration given by the acquirer. And the fourth, recognize and measure the identifiable assets acquired, the liabilities assumed, and any non-controlling interest in the acquirer. Any resulting goodwill or gain from bargain purchase should be recognized. So, meaning to say, first you should, in the steps of in accounting for business combination, first you need to identify first the acquirer. We tackle in our course. Second, you need to determine the acquisition date, the date when you have the full control of the business. Second, then the third one is determining what consideration is given by the acquirer. Okay, and the fourth one is the way you recognize and measure any identifiable assets acquired, liabilities assumed, and other any non-controlling interest in the acquirer. Okay, so any resulting goodwill or gain from the bargain purchase should be recognized. Thank you. So let's proceed. Okay, so with this means actually we need to focus also on the measurement of the consideration. When the acquirer have this, actually we are actually going to debate how the measurement of the consideration is being done. First, it should assets given up. The assets given up, it should be in fair value at acquisition date. Okay, then the liabilities issued, it should be in fair value. It should be measured in fair value or present value. The third one, shares issued, it should be measured at fair value or but considered that acquisition related costs. Okay, so you should also it is actually considered at the fair value, but also you need to consider the related acquisition cost. The fourth one is contingent consideration. It should also be also in a fair value or present value. However, if in case there previously held interest, okay, the PHI, interest already acquired prior to the application of the control, so you should actually remeasured for fair value, and the difference should be treated as gain or loss as a measurement in effect on the profit or loss. Okay, so once you have this type of prevailing held interest, you need to remeasure it, and if there's any prevailing gain on the measurement, it should be in effect, it should be effect, it will give effect to your profit and loss statement. The second one, the last one is actually the control premium. So premiums are amount paid in excess of fair value to gain control. So meaning to say, I think this is actually called the goodwill. So anything that you pay towards that when acquiring to have the full control of the business. So anything that you paid more at the fair value is considered goodwill, and it should be actually reflected to your profit and loss. Okay, so let's move on to what if there's actually remeasurement of the contingent consideration when you are actually doing this business combination. So under remeasurement of contingent consideration, where there's a change in the fair value of the contingent consideration in the result of additional information about facts and circumstances that existed at the acquisition date. These changes are actually accounted for the measurement and the adjustment if they arise during the measurement period. Okay, so contingent consideration must be measured at fair value at the time of the business combination is taken into account in the determination of the goodwill. So anything that in the contingent consideration there's any changes, therefore it should be accounted and remeasured at fair value, and you are going to anything that is go beyond amount of what we have paid based on the fair value of the assets that you have purchased, or the liabilities that you have presumed, or any non-controlling interest. So any excess on that, you will going to put it in the profit loss statement, but it's under goodwill. And if in case the remeasurement and anything that arise from that, that you have that the assets is more that the assets and you have proclaimed is more than what you have paid, so therefore you need to also acknowledge it for the acknowledge it for the gain on the bargain price. Okay, so the next actually we're gonna discuss also on the measurement of an identifiable net asset. Okay, so for INA, so anything that identifiable net assets, like for example goodwill of acquire, so generally you put 0, and next is the prepaid expense of acquire, generally you put it also 0. Depends actually on how it actually detailed on the statement or the questions, but usually they generally put it 0. And of course operating lease, so acquires is in the leasee, acquiree is the leasee, for example. So it's favorable asset of acquire at face value of the difference, and it's an unfavorable if the liability of the acquire at face value is difference. And the next one, if the acquiree is the lessor, so you just ignore it. Okay, so that's what you call you identify the identifiable net assets in. Next one is measurement of period. Within 1 year from the acquisition date, the acquirer can retrospectively adjust the provisional amount recognized to reflect new information about the existing events of conditions as the acquisition date impact on the goodwill or gain. So within 1 year, you still have the chance actually to change it, the calculations. It depends on the new informations on the recalculations of the assets. For example, sometimes actually there are some assets that you cannot at recognizable at the moment, the face value, so therefore you do have provisional amount, but you have 1 year to complete that paperwork in order to declare what is the face value of the assets that being actually acquired by the acquirer from the acquiree. Okay, so this we call actually acquisition related costs. The acquisition related costs, these are necessary costs to effect business combination. So this acquisition related cost was actually a part or necessary cost that is actually in effect when we do the business combination. For example, share or debt insurance of cost. So it's a share or a debt issuance cost, let's say deduction of share premiums or APEC, and anything that actually that goes for also to the return earnings. So any that reflect to that of the share and debt issuance, so it will be in the acquisition related costs. Next one is other cost related other cost expense. It's either direct cost or indirect cost in the process of the business combination. So therefore, it should be actually reflected also in order to have a good reflection on your profit and loss. Okay. Okay, so that's actually to sum up in summary that business combinations under IFRS 3 or PFRS under the Philippine Financial Standard Reporting Standard 3 entails of the basic formulation of business combination. So our course, as I said in the introduction, that in our course it is actually fully structured. It involves on the introduction of the business combinations, the prevailing standards that actually the IFRS 3 or the PFRS 3 under the Philippine Financial Reporting Standards. Is in our course as well, it tackles the different acquisition, acquisition based on the merger, and of course the consolidation, and of course the other one is stock acquisition. So these are being tackled in our course, and it fully actually detailed, so you will not be lost with this one, plus the legalities of the documentations and literatures evolving the IFRS 3, the measurements, the goodwill, how to calculate the goodwill of a business combination, the bargain purchase again, bargain price when you are actually paying less when you do the acquiring of the company against the actual face value of the assets. So anything if you pay more, so it's actually your on goodwill because you pay more against the face value of the assets. But of course, it details about also the measurement of the date when you can be able to change the the information of the assets, liabilities you presume, or the non-controlling interest actually. So it's really very this course is very detailed, and in the essence that you can be able to learn more. I know it's really complex, especially as we actually study in this online education. We dig ourselves, we study by ourselves, and we give ourselves enough time to understand the definitions, the new terminologies, the concepts that need to be obtained in order to get the proper calculations of goodwill, the proper calculations of expense, and other reflecting on the understanding how it actually reflects on the return earnings, or it reflects on the apex. These are the things are very important. It's on our course it's fully structured, so as a student you need to understand step by step, one by one, each concepts and structures, and the the methodology, and of course how it's being structured on the questions, the problem solving, on how to get the goodwill, and all this gain on bargain price, how to get the expense, the expenditure, how all these things. It really actually put onto myself actually that to become to become and have the understanding of business combination under IFRS 3. It really needs full detailed to attention. It's not just an easy task for you just to go from one here and steps and go jump from another chapter. No. So my point here is that the three videos that I'm seeing, like for example the summary of IFRS 3 and the introduction of business combination, and of course under our first advanced financial and reporting standards. So therefore these three videos actually are intertwined to each other, and it give us as student to understand why what is the IFRS 3 or PFRS 3 there, and that standard actually making to make it straight, because if you mention actually consolidated financial statements, that's also under IFRS 10. So it's another standard that you need actually to understand as well. But for me as a student, after seeing these videos, it really reflects on the basic combination of business standards, business combinations that entails acquisitions, measurement, goodwill, and gain on bargain price, measurements of it took a year, your control on the business of how you can be able to control the business. It should be 50% above, so that you have the full control because you have the power of voting. So all these stuffs, all these things are very great, and it combined much of your understanding that business combinations, it really entails thorough understanding the entire step-by-step factors. Accountants and bookkeepers, financial analysts should actually have the real knowledge of this on IFRS 3 on business combinations, because it's really a complex as to my understanding on this course. So I would like to say thank you for giving me this time to let me try to summarize my understanding and get through of what I understand. It is a start for me of understanding these business combinations, but it is really indeed great information for me that when I talked about business communication combinations, I know that there are a lot of complexity in there, and I know the new concepts, the structure, the new words, new glossary, new information, and the way it calculates for its every aspect of the business. And to end my defense of this video, I would like to say thank you very much for your time, for hearing my video defense on the explanations between the course that we're taking with online ALMA for these business combinations against on the three videos that you have given us the link to be seen, so that we can be able to differentiate the aspects of both the course against the videos. So in general, they are almost the same. It covers business combinations, but of course, when you go through with the step by steps structural, it's good to go with a course program because you will be have the knowledge of step to steps, literature concepts, and new definitions of words, calculation wise, and other things that are important for you to know about business combinations. And on the videos, it gives you a quick actually it's comprehensive. It's nice to see the examples of how to compute goodwill and other stuff on business combinations. It's both actually is informative, but still we need to undergo to the course to understand better and have better information to understand this course program that we have. Thank you and have a nice evening. I'm here in